$3 per month for public transportation. You take the RTD bus, the train, you have a monthly pass, you're entitled up to that much. You can take the entire amount. Ownership costs. National, you're entitled to $489 if you own one automobile. If you're married, let's say, you're entitled to 2 cars. If you have kids, forget it. It's only for you and the spouse here. For 2 cars, they allow you $978, which is fine. You can lease a car nowadays, buy a car for even much less than this. But if you don't have a car payment, the IRS will take the extra here at the bottom of this, the difference between the income and the expense. So it's good to own a car. You're entitled to it. Then you have your operating costs. And again, those operating costs are based upon regions. So you take a look and you see where you're at. If you turn the page, Los Angeles, we have $261. That's what I put in here, $261. That's for insurance, gas, repairs, maintenance, the entire thing. That's the way it is. If you have an engine overhaul or car costs you more than that, they will not allow it. So folks, just put that number down. Then go down. If you have health insurance, they allow you to pay for that. How wonderful, right? I mean, our health program today is pretty sad, and hopefully there'll be changes by the election. Healthcare costs, court-ordered payments, you are entitled to that. Child dependent care, of course, you go to work, somebody needs to watch over your child, you're entitled to that. Life insurance. Taxes, very important, folks. If you're preparing this form for you or your client, and here they have taxes, get the actual. What I do is I prepare an entire return. Let's assume I have a client making $30,000 a year. His liability for federal income tax is $5,000. Then I take the $30,000 times 7.65%. That's your FICA tax, Social Security and Medicare. And I arrive, let's assume 7.6% times 30,000, $2,100. So I've got $2,100 there in Social Security tax. That's my client is paying. I have $5,000 in federal income tax. Let's say in state tax on the return, I show $500. So we've got 71 plus 5, that's $7,600 that we're paying out in income taxes based upon an accurate return that we found. Take that, multiply it by 12 months, and put that figure down here. Arrive at actual. Don't make that up. Don't say, oh, okay, I'm on my pay stub. I make $4,000 a month, and I'm paying $2,000. That doesn't work. Prepare a return, get the actual. Federal income tax, state income tax, if you live in a state that you pay taxes, and your Social Security and Medicare that you actually pay. Divided by 12, that's where this goes. Total living expenses, in this case we have $3,018. So the difference here is about $482, I guess. That is your payment plan to the IRS. This is your total income, total allowable expenses. The difference is what you need to pay. Now, if your expenses exceed your income, well, then you say, hey, my client wants to pay something. Number one, they can be placed as uncollectible if that's what you wish to do. And then, but you got to remember, the money that you owe accumulates between failure to pay and the interest about 20% a year. It's very steep. So use your judgment there, whether you want to pay something or you don't, if your expenses, allowable expenses, exceed your income. And, or vice versa. In this case here, okay, my client is able to pay $482 based on the financial. Sign it, I mean, have your client sign it or you sign it if you're representing yourself. And then you want to make sure you have attachment required down below. It's very simple. Just follow through with it. It's really very simple. And those are the substantiation that they would need. Make sure they're ready. If you're representing your client, I'll repeat again, just call Practitioner Priority Service, set up a payment plan, or ACS, Automated Collection Services, or a revenue officer if a letter is received by you or your client to work this out. Now, if you're self-employed, well, then you turn to page 5, just follow through the form, it's self-explanatory. And pretty much, that's all you're entitled to do with the collection division. Now, if you can't work things out, just file form 911. And if you're talking to somebody from the IRS, tell them, hey, I can't believe you can't allow us this when it's mandated by law that we're entitled to it. I'm going to file form 911 and explain this. You have two options. You make a payment plan, or you do an offer and compromise. In this case here, if just at a quick glance, if you're going to do an offer and compromise, your minimum offer will be $482 times 48. That's $23,000, which we'll discuss in the offer section, plus disposable assets or liquidated assets, which we'll also discuss in the offer and compromise. I hope you enjoyed this. Watch it 3 times if you have to. Review everything I've given you. Print out a blank 433A, practice it, and do it right. Thank you for watching.